Hello everyone, welcome back to another video. In this video today, you will learn to prepare the accumulated depreciation account. So you'll see the question on the left hand side of your screen, and on the right hand side you'll see all the workings which I'll go through step by step. So with that being said, let's focus and begin. Pelayo started his business, Pelayo Pizza, on 1 July 2014. The following information relates to the expenditure of the business on office equipment. Here we have got three information. On 1 July 2014, the business bought three new laptops, $3,000 each, by check, which means altogether the three laptops should cost a total of $9,000. On 8 March 2017, one of the laptops was sold for $1,800 to Isaac IT on credit, and then on 15 March 2017, an additional laptop was purchased on credit for $2,500 from Shabbat System. It is the policy of the company to charge depreciation on office equipment at a rate of 20% per annum on net book value, which also stands for the reducing balance method. A full year's depreciation is provided in the year of purchase, but no depreciation is provided in the year of sale. As you can see, the requirement of the question is to prepare the accumulated depreciation account for each of the 3 years ending 30 June 2015, 2016, and 2017. All right? Now let's look into the workings on the right-hand side. First of all, we understand that the business started on 1 July 2014. All right? So the financial year started on 1 July 2014, which means the first financial year should end on 30 June 2015, which is 12 months after 1 July 2014. So in year one, which starts on 1 July 2014 and ends on 30 June 2015, we know that we had bought three laptops, and each of those three laptops costed us $3,000. Okay? Now let's calculate the depreciation for one of these laptops. We know in the year of purchase, we apply a full depreciation. So the full depreciation for one laptop in the year of purchase should be simply the given percentage multiplied on the cost. When you're using the reducing balance method, always remember that in the first year of usage for the asset, you calculate the depreciation by multiplying the percentage with the cost, and when you move to year two, you multiply the percentage with the net book value. So if I want to calculate depreciation now, I'm multiplying 20% with the cost of $3,000, which gives us $600 as the full depreciation for one laptop in the first year, which started on 1 July 2014 and ended on 30 June 2015. Now, the net book value is something we also want to calculate under the reducing balance method. So we want to find the net book value at the end of year one, which is at 30 June 2015. Okay? And at a given point in time, if you want to find the net book value, it's simply the difference between the original cost and the accumulated depreciation. The accumulated depreciation means the total depreciation that we have so far for this specific asset. Since this asset was in the first year of usage, the only depreciation that we have so far is the $600, which we had calculated earlier. Okay? So the original cost is $3,000 for one laptop, minus $600 for the depreciation that we have calculated in the first year, which gives us a net book value at 30 June 2015 of $2,400. Okay? Now, we know that the depreciation for one laptop is $600, right? This means that the total depreciation for three laptops is 600 multiplied by 3, which is $1,800. Why did I simply multiply with 3? Because we know that each of these laptops were purchased on the same date of 1 July 2014, and each of these laptops also costed the same, which is $3,000 each, all right? As we can verify with the first information, all right? Now, my question to you is, what's the journal entry for this total depreciation for three laptops of $1,800 that we have calculated in year one? If you want to do the journal entry, it's always debit depreciation of office equipment, which is basically you increasing the expense by $1,800, and then you credit accumulated depreciation of office equipment by $1,800, which is a contra asset account. And what do I mean by a contra asset account? It records the reduction for a relevant non-current asset account, which in this case is the office equipment account. All right. So always remember, every time you have depreciation expense that you want to journalize, you debit the depreciation account and then you credit the accumulated depreciation account. Now, why do we need to know this journal entry? Now let's start preparing the accumulated depreciation account. As you can see, I've already drafted an account earlier, which is in a 5-column format, with the first column being the date or the years, the second column being the cross-reference with different accounts, the third column being the debit column, the fourth column being the credit column, and the fifth column being the net balance column. Now, in 2015, 30 June, you can see that I'm recording depreciation of office equipment, and that's $1,800. Now, how does this relate to the journal entry? In the journal entry, we debited the depreciation expense account, but we credited the accumulated depreciation account, right? What does that mean? That means when you want to post this entry within the accumulated depreciation office equipment account that we have got here, you need to show this $1,800 on the credit side based on the journal entry where we had to credit the accumulated depreciation account. And that accumulated depreciation account got credited in the journal entry because of the depreciation of office equipment, which took the debit entry. And that's the cross-reference for the account that we're using here in the first row. All right? So the net balance that we've got left at 30 June 2015 is $1,800, and it's a credit balance because we do not have any debits here. We only have credit, so the final total should have a credit added to $1,800. Okay? Next, so this balance gets carried forward on 1 July 2014 as the opening balance. And this is $1,800 credit. And this should always be credit because accumulated depreciation account always has a credit opening balance. And the reason is because it's a contra asset account. And what do we understand by a contra asset account? A contra asset account is an account which records the reduction for a relevant non-current asset account. And the relevant non-current asset account in this case is the office equipment account. So the office equipment is an asset account which should always by default have a debit opening balance. And because accumulated depreciation is a contra asset account which records the reduction, therefore it must always have a credit opening balance. Okay? All right. So now let's move to the second year, which is year 2. And year 2, which starts on 1 July 2015 and ends on 30 June 2016. In year 2, if I want to find the depreciation using the reducing balance method and based on the requirements given in the question, we have to calculate depreciation by multiplying the given percentage with the net book value. The given percentage is 20 and the net book value is $2,400. How do we know it's $2,400? This is what we had calculated, the net book value for one laptop at the end of 30 June 2015 or at the end of year 1, which was $2,400. As you can see, I'm just circling. Now, 20% multiplied with $2,400 gives us $480 as the depreciation for year 2, and that's for one laptop, okay? Now, again, always remember to find the net book value at the end of every year, mainly under the reducing balance method. So the net book value at 30 June 2016 is simply the net book value that we had at the end of year 1, which was $2,400, minus the depreciation expense that we had calculated for this year, which is $480, and that gives us $1,920 altogether, okay? Now, the total depreciation for 3 laptops, given that every laptop costs the same amount, is basically $480, which we calculated as a depreciation for the second year for one laptop, multiplied by 3, altogether, which gives us $1,440, okay? Now, how should we journalize this in year 2? Again, we will debit the depreciation expense account by $1,440, and we would credit the accumulated depreciation of office equipment account by $1,440. Now, within the main account for accumulated depreciation of office equipment, you will see that at 30 June 2016, all right, which is the end of the financial year, I've included the amount on the credit side based on what we've just discussed with regards to the journal entry, and the cross-reference here is the depreciation of office equipment, okay? So altogether, if you add $1,440 on the credit side with the $1,800 credit opening balance, we should have $3,240 as the final balance on the credit side, okay? Now this balance gets carried forward as the opening balance on 1 July 2016, which is the year 3 we're talking about, and that's 3,240 credit. Why is it always credit? Because again, accumulated depreciation is a contra asset account, which means by default, it should always have a credit opening balance. Now, let's do the calculations for year 3. Year 3 starts on 1 July 2016 and ends on 30 June 2017. Okay, and we know that in year 3 we have sold one laptop. Based on the second additional information that we're given, on 8 March 2017, one of the laptops was sold for $1,800 to Isaac IT on credit. Okay, now we don't calculate any depreciation for this laptop that we have sold, and this is mainly based on the company's policy, which is given in the last paragraph of the question, which clearly mentions a full depreciation is provided in the year of purchase, but no depreciation is provided in the year of sale. Do you see that? I'm just underlining it, okay? So this laptop that we have sold has no depreciation that needs to be calculated in year 3, okay? All right? Now, I want to find the accumulated depreciation for this one laptop before I move forward, which is basically $600 that I calculated in year 1, plus $480 that I calculated in year 2. I believe you recall from our calculations earlier, and that's $1,080, right? Now, why do I need to know this number? Now, you will see why. So I'll take you to the accumulated depreciation of office equipment account, and you will see that in the year 2017, on 8 March, including 1,080 within the debit column of the accumulated depreciation of office equipment account, and the cross-reference for the account that I have used in this case is the sale of non-current asset. Now, why did I do that? Why is it within the debit column? Again, think about it. We have just sold one laptop, and we calculated the accumulated depreciation to be $1,080 in total. If we are selling this laptop, this is no longer recorded in the books. This should no longer remain in the books. We know that accumulated depreciation is a contra asset account, which means by default, the opening balance is always on the credit side, which means if this account increases, we record it in the credit side. But now that we're getting rid of one asset because we have sold it, we have to reduce the accumulated depreciation account, right? And if we have to reduce it, we will do the opposite of what we do when we increase it. So if we reduce it now, we'll have to debit it. So that is why this is being included on the debit column, okay? So the $1,080 with the cross-reference of sale of non-current asset account, okay? So this 1,080 debit is subtracted from 3,040 credit, which leaves us with a net balance of 2,160 credit, okay? Obviously, this is credit because we have more credits compared to debit, so the final amount has more credits, okay? All right, now let's move to calculate the depreciation in year 3 for the 2 remaining laptops from 1 July 2014, okay? Each of these 2 remaining laptops will be depreciated using the reducing balance method based on the company's policy. And they will all obviously have a full depreciation because they were not sold and they were still in use within the business for the entire year. So how do we find the depreciation for each of these 2 laptops? We multiply the given percentage with the net book value. The percentage is 20, as we know. The net book value was $1,920 at 30 June 2015. If you recall, you can check your workings. In year 2, the net book value was $1,920. And that gives us a depreciation of $384 for one laptop, which means the total depreciation for 2 laptops together will be 384 times 2, which is $768. Okay? All right. Now, let's look into the last information we've got with regards to the purchase of a new laptop. On the third additional information, we know that on 15 March 2017, an additional laptop was purchased on credit for $2,500. Now, this new laptop, which we have purchased, is going to have a full depreciation based on the company's policy, which is mentioned in the last paragraph of the question. So how do we calculate the full depreciation for a new asset in using the reducing balance method? In the first year of purchase, we multiply the given percentage with the cost, which is simply multiplying 20% with the cost of $2,500, and that gives us a full depreciation of $500 for this new laptop. Okay. Now, I want to find the total depreciation in year 3 that we have calculated for the 2 old laptops plus the new laptop that we have bought, which is $768 for the 2 old laptops plus $500 for the new laptop that we have bought, altogether which gives us $1,268. Now, how should we record this in the accumulated depreciation of office equipment account? We know the journal entry is to always debit the depreciation expense account and credit the accumulated depreciation account, because accumulated depreciation is now going up by $1,268. So if you check the accumulated depreciation main account that we have here on the left-hand side, you will see that at 30 June 2017, I've recorded $1,268 within the credit column, and the cross-reference is depreciation of office equipment. So this $1,268 on the credit column gets added to $2,160 credit, which altogether gives us $3,428 credit as the balance. Okay, and obviously this gets carried forward on 1 July 2017, which is the opening balance of $3,428 credit. Okay. So that's all for today's lesson. I believe you found value in this content. Make sure to subscribe to this channel and share these videos with your friends. And if you want tutoring sessions, you'll find a link in the description, which you can book a call with me and discuss your requirements. And I'll see you in the next lesson.